It's Monday. That means it's Setup Monday here on this rainy day in Washington, D.C. And what a U.S. Open we just had at around 8 to 9 p.m. a.m. EST. We had a bit of a cascading margin waterfall. Everybody was longed to the hilt. Fees extremely high, open interest extremely high. A long squeeze, as it were, was ripe across the board. So where do we stand here now for the week? The biggest thing when any of these dumps happen is how quickly does it get bought up, and is the low revisited? Is the low broken? So that's really the most important thing over the next week. Do we break the low? If we break the low, the sentiment is pretty clear that we have more sellers than buyers. A few people caught off guard this morning, but throughout the week, we'll have a post-dump clarity, and we'll figure out, is this bullish continuation? Is this a dip buying opportunity? Was it a dip buying opportunity? In retrospect, we'll find out. But the big thing is, will we break the wick low of today? Depending on which exchange and which chart you're looking at, I'll get to that for ETH, which dumped to $700 on Kraken in a flash crash, low liquidity moment, classic for Kraken. I'm guessing the exchange was unresponsive as well as that at that time, so it was really only people who had bids on the book or API traders, most likely even had access at that time. But if we're leaning on the indicators, I'm really looking at two things on the BTC daily chart. We had this run up post 41K on less and less volume, which traditionally is considered a bearish divergence. Although RSI looked pretty healthy, RSI kept rising with rising prices. That's what you want to see. Over the next week or two, we may see a return to that 41K level, basically the breakout level, a throwback as it were, which is also the daily Kijun. We had two taps of that in late January. Historically, we don't see super frequent Kijun bounces on the daily, but it's not to say you just trade them the same every time. This may end up being a Tenkan bounce, which is what we had in late last year on the daily on these settings, where we just held this blue line, the Tenkan here, for multiple weeks. You can see we tap that here. These TK lines at this point are going to flatten out over the next few days and just show you where that support is over the next week. Now, if you're looking at the 12-hour, which is the daily singled, just a different way to view this, you're looking at 43.8 as a support. You can see these TK lines have already flattened out over the past 12 hours. The Tenkan is not holding here. It gets a little more noisy, obviously, if you're comparing the two. But if you want to zoom in for support, I would be looking at 41 to 44 as the definitive bounce point for any downside on BTC. We can look at other things like the pitchfork, pick 3 points, you get a rate of change. You have a median line which acts as a magnet for price. We haven't touched that since late last year, so a touch of that is always possible. The 200-day moving average is also at that level conveniently, which is pretty ugly downside, honestly, below 30K at this point. And it kind of is what it is regardless of where it sits on the downside, the price. That's almost a 50% drop, obviously, and it would be quite something to see that. But it's never not a possibility, and if this trend is multi-month, multi-week, you do tend to see that. I mean, we saw a drop from 41 to 30, which was significant, and we bounced from that. So zooming way out, there's really no concern. As long as we remain in the pitchfork, that's what you want to see. There's also confluence for support on the yearly pivots at 44, at 37.5. So, if we start to break those levels, we'll see what happens when we get there, but they should act as a strong support in the near term. So all in all for BTC, I'm not too concerned. This is ETH on the minute chart on Kraken, and you can see when liquidity disappears temporarily, how that affects price. Now my guess is very few longs on ETHUSD survived this, because we're talking prices not seen since really January, so you can only hold a margin position on Kraken for a month if you're in the US, so that's 30 days. So anybody on the US side who was long may have gotten liquidated on that price action. Like I mentioned earlier, the exchange probably just was down. I don't know the exact specifications at this time, but you can see just the gap in the volume here where everything kind of stopped. This isn't a market halt or anything. It's just Kraken being Kraken and ceasing to function. And it tapped, what, 700 or 699, something like that on the low. And in short order, just returned back to that 1700 level. So this is something you never want to see as a trader. And it's going to get a lot of headlines and concerns, and it rightfully should. This is an issue that just shouldn't happen if the exchanges are working properly. And we can compare this to Bitstamp and Coinbase, and it didn't happen on those exchanges. So the post-mortem is, why did this happen on Kraken specifically? How can it be prevented? Why does it happen so frequently on places like Kraken? That's something that they're going to have to look at internally. But if we look at a different chart that isn't Kraken, because that's forever going to be on the Kraken chart now, and it's going to be a scar that won't ever heal because it's always going to be there. But if we're being realistic, this is Coinbase. Again, you had more of a bearish divergence because you had a continuous rise in price since January on less and less volume. ETH fees are really the big thing here. ETH fees crushed any hopes of massive continuation because ETH's main run-up was DeFi related, compute related, and if fewer and fewer people can participate as fees get higher and higher, people get priced out of the market, people get concerned that fees are as high as they are, and they go somewhere else. They go to a different chain, they use a different exchange, etc., and eventually people stop caring about ETH, as was pretty clear in the volume. You also had a type of bearish divergence here. You did see slightly higher RSI, but if prices are rising and RSI isn't following in any way, that's bearish. Now this is less bearish than if RSI had a definitive lower low. So I'd call this just a mild bearish divergence overall, but that was definitely a concern, the volume most obviously. So where do we sit now? Again, we're getting a pseudo Tenkan bounce, I guess you could call it, but I'd be looking to the 1300 levels at this point for ETH on the daily. You can see since January, really, we can go all the way back to November when we broke out. We haven't really tapped the Kijun much. So here's a tap here in late November. Here's a tap here in early January. But these taps don't last long. That just shows you the strength of this. Mostly it's Tenkan bounces that we're seeing over and over and over again. And we had the TKC clamp-ish, it wasn't definitive, it wasn't flat, right? If we want a TKC clamp, we want a wide separation. We want the Tenkan and the Kijun to go flat. That says the market momentum is flat as well, and it's just more likely to experience a mean reversion. So we didn't really see that on ETH even before this move. But like I said, for BTC, these TK lines are going to flatten out. And if we look at the 4 hour, which is super noisy, but it's something that I'd be looking to here at this point, trading ETH, because for the most part, the cloud should reset. All these settings will reset, and you'll get a cleaner entry point on the 4 hour. And you can see the cloud flipping bearish here, price into the cloud. All this is going to be super noisy over the next week, 4 days, let's say. And if this can pull above the cloud over the next 2 weeks, really that's probably how long it's going to take, then you'll get a very clear signal, a long entry signal. That's what I'd be looking for as far as relonging ETH. If you're not buying prices at 1300, you're looking for a relong probably between 15 and 16 as the cloud figures itself out on the 4 hour. Here's the Kraken chart on the Pitchfork. I also have the 200 period moving average and yearly pivots. And it's never a bad idea to have bids at the 200-day moving average just for events like today, especially on an exchange like Kraken when stuff like this tends to happen. I didn't personally have bids there, but you can see the evidence is always mounting for just have something there. You never know, right? You're instantly up 2x for many buys at that level. Whether or not you want to use margin is up to you, but it's never not a bad idea just to have some sort of bids there. Now, just looking at the Pitchfork, again, this is 3 points, rate of change. This is the median line. This is the expectation over time where price will continuously return. And you can see it did that several times throughout 2020. And in early 2021, it got just completely overblown. And you can say, okay, it's a new phase of the bull market. We can go to infinity, sure, but relative to where the rate of change was, this was definitely overbought. Not only that, we were bear divving above the pitchfork. We were bear divving into yearly pivots, which you don't want to see. So for ETH, the yearly pivots are quite tight here between 2200 and 1600. Ideally, price remains within this because the next lowest yearly pivot would be 1200. So over the next week, all of this is fair game. But if you are bullish ETH, you want to see it maintain this bullish 4-hour cloud, certainly. If you are a non-aggressive dip buyer, you want to see a continued pullback to 1300. Either way, depending on how you trade this, that's healthy, right? Just look at the mean of the 200-day moving average, and that's below 1,000. So all of this still remains bullish, just looks ugly on the Kraken chart. And the rising wedge on ETH was another concern. Rising wedges are typically bearish because, like a plane flying higher and higher and higher in a straight line or a 45-degree angle, eventually the engines stall out. This represents usually continued period of FOMO, or fear of missing out, from people. And again, you can see this volume just petering out kind of to nothing. So you're getting higher highs on less volume, bear div. You're getting weakening bullish momentum. And eventually people just say, you know what, I'm going to sit this one out. I'm going to wait for a pullback. And then the selling happens. You break the pattern. And ideally, you pull back 50% of this pattern, which is somewhere between probably 11, 12, 13, something like that, if you measure it out from the high to this wick here. So this is not historically a bullish pattern. We can argue about that, rising wedges being bullish or bearish. But if I see this on a chart, I can't be bullish because typically it represents a lack of momentum or continued momentum to the upside. And then lastly, I'll just mention stuff like DOT, which sold off on Kraken as well. So all these leveraged long positions most likely got wiped out on Kraken. And you're going to see large liquidations on most every exchange today. One of the biggest ever, like I mentioned at the beginning. OI, open interest, was super high. Funding was super high. So people are paying a lot of money to be long. And they're more likely to close their long positions because of this. They're more likely to have higher stop losses because of this. So all of this plays a factor in this like cascading effect to the downside, what we saw today. And honestly, it's a healthy culling aside from Kraken, which is just shouldn't happen, period, in any market ever. But it is what it is. But this is a healthy culling for any bull trend of any traders who were over leveraged at the top, and it rewards people who were waiting for dip opportunities like this. So I'm not bearish overall. I'd be cautiously bullish over the course of the week personally, and I'd be waiting to see if the lows of these wicks on non-Kraken exchanges are revisited, if they hold, and if we can maintain general bullishness throughout the week without further cascading liquidations over the next few days.